And now to our market monitor, who says individual stock selection is key in this low return environment. The last time he was on in February, he recommended Symantec, which is down 19%, Microsoft, which gained 25%, and Qualcomm, which is down about 25%. He's Jordan Posner, Senior Portfolio Manager at Matrix Asset Advisors. And Jordan, thanks for being here.
Pleasure.
We don't have that much longer in 2015, but what is your outlook for U.S. stocks for the end of the year?
Well, we think there's still chance for bouts of volatility, as we've seen in the third quarter, and then, of course, over the course of October in reverse. We think that earnings have come in okay, and as a result, in a kind of a flat to slow growth earnings environment, that's actually been a pretty good environment for stock picking. We expect that the year will end up probably in the plus mid-single digit range, call it 4 to 7%. For the full year 2015, and we expect improvement in 2016 beyond.
Now, you're a value player, so you're going to look at maybe some fallen giants, and I put Harley-Davidson in that category. That recently said, hey, they're struggling. The currencies are a headwind for them, and they've got other problems going on with their product lineup. You like that stock, though, at these price levels, I guess, huh? Well,
we do. We like it a lot. The stock trades at under 12 times earnings. Has a dividend yield over 2%. They've started to address their problems, some of which were currency-related versus competition. They've funded a program for improving their product and improving their marketing from cost cuts internally, and they're buying back a lot of stock through an under-levered balance sheet.
And now you're looking at every industry and any industry to invest in where you see value. You like an orthopedics device company. Why do you like this one?
Zimmer Biomet, it's one of the leaders in the industry. Zimmer bought Biomet a little bit less than a year ago. They've levered up in terms of their debt. They're beginning to pay that down, which will pay it down very rapidly. The earnings progression here is very clear over the course of the next couple of years. Trades at around 13 times earnings, and we think there's probably 25% upside in the stock.
And then finally, the giant in Teva, in generic drugs, Teva Pharmaceuticals. You like that one as well?
Right. People have been concerned about Teva because of their reliance on a drug for multiple sclerosis that's been responsible for about 40% of their profitability. That's been more stable than people have expected. They've got a big generics combination deal on the table with Allergan. This is a company where a new CEO has really stabilized the business and improved the strategy, and the visibility of forward earnings is very strong. We think the company has a very positive outlook in front of it.
That new strategy is what you're looking at. Thank you, Jordan Posner with Matrix Asset Advisor, for joining us.
Pleasure.